Good afternoon from Hong Kong. My name is Aidan Gregory, Senior Correspondent at InsuranceAsia News, and I'm joined by Iain Reynolds, Head of Third Party Capital at Peak Re.
Thanks, Aidan. Pleasure to be here.
We're here this afternoon to discuss the development of the catastrophe bond and ILS market here in Asia Pacific, particularly Hong Kong, where the government has moved in the last 2 years to create a local regime pretty much from scratch. So, Iain, after a record year for catastrophe bond issuance in 2025 of over $25 billion, do you expect the global cat bond market to sort of continue the strong momentum that we saw last year into 2026? And what are the reasons behind the record growth of the market that we've seen recently?
Investors have been very pleased with the performance of the dedicated funds, and I think most of the asset managers have been given a mandate to retain the earnings that they've made and reinvest in the same class and keep going. And I think so there's a definite push on the supply side. This has been matched by demand from people, from sponsors placing bonds. So it's too early to predict what will happen, but that seems to be the way the market's moving. So there's no reason to assume that will change in 26.
It's been helped as well, right, by the fact that natural catastrophe losses have been, pretty benign throughout the course of last year, and a lot of the catastrophe bond funds have seen inflows. Well,
I think compared to some prior years, there have been lower losses, but of course there have been significant cat events in the market. We've seen, particularly affecting the ILS market, the California wildfires. I think more locally, we've seen a big earthquake in Myanmar causing losses in Thailand. We've seen flooding as we always do. So the demand is still there.
Peak Re has been at the forefront of the development of the catastrophe bond market here in Hong Kong. Do you have any ambitions to return to the ILS market in 2026?
Firstly, thank you, Aidan. That's very generous of you. We like to think that's true. We wouldn't really want to comment on specific plans. I think more generally it's fair to say that we are, of course, supportive of the development here in Hong Kong. We think it's been a great initiative. Third-party capital, insurance-linked securities, other sources of capital are always in our thoughts when we look at how we want to conduct business.
So you're pleased with the progress that's been made so far in terms of the setting up of a local ILS regime here in Hong Kong?
I think, we're very pleased with the way that's been progressing. I think we've seen great progress. We've seen a number of issuances. Our experience with the process has been very smooth, so we're very supportive of the effort. We think it's a great place to do this kind of transaction in Hong Kong. I guess if I were to sound a slight note of caution, I think what we would really like to see is more interest from local investors, and I think the onus is on all of us, sponsors, regulators, and everyone in the market to try and continue to build up awareness of this asset class in the region.
At the moment, particularly among sort of high net worth investors in Asia, there's sort of very little awareness of the attractiveness of the asset class.
We're not seeing such interest locally, it has to be said. We do recognise that our regulator, the insurance authority, and other parties such as ourselves have made efforts to generate interest in the assets locally, but I think the take-up has been slow so far. But we look forward to this improving as the regime matures.
What further regulatory changes would you like to see to deepen the attractiveness of Hong Kong as a centre for risk management and ILS?
Well, I think we've had a good start. So I think the ILS regime is a positive addition. I think the way it's been executed has really worked. And I think as a sponsor and as a domicile for special purpose vehicles, Hong Kong is a great place to do these transactions. Again, if I can sound a slight note of caution, I think what we would like to see going forward would be a little more clarity on the part of all of the regulators, particularly on the financial side. Clearer who are qualified investors, and to make it a more attractive asset class, or make it clearer to investors those who are qualified to look at this asset class locally.
There's no shortage of high net worth investors here in Hong Kong, but it sounds like there's still a great deal of investor education work to do when it comes to getting them to invest in ILS. Have you found that cat bonds are gaining more traction among local investors here in the region?
Absolutely. I mean, this is an asset management hub. We have wealthy private investors, we have institutional investors. There should be interest.
Do you have a view on the direction of the reinsurance market in Asia Pacific? We've obviously seen some pretty material market softening at the recent 1/1 renewals, and how does ILS play into those dynamics?
Well, you're right. The headlines have been about rate softening. I think we still see momentum in the take-up of reinsurance in the region, and the function of reinsurance in supporting developing economies, that case still remains to be true. I think while we do hear about rate softening all the time, and it's true that there has been rate softening, it's important to point out that that's the easy metric to use about the market. And what we have seen, and if you read the small print behind some of the headlines, what we do see is that terms and conditions are holding. So breadth of cover there's more discipline in breadth of cover, and for example, attachment points on excess of loss business. So there has been rate softening, but we do see a discipline being maintained in the market.
And how do you see the ILS market playing out in the context of this year?
I think ILS has an important part to play, both in the region and globally. Of course, generally, the ILS market is concentrated in North America, where the peak risk is, but it still has an important part to play in this region. What we would like to see locally would be not just catastrophe bonds, but perhaps also sidecars, so building products in which smaller participations are possible, perhaps through a transformer vehicle like a reinsurer.
The global market, as you say, remains highly North America centric, particularly Florida hurricanes. Over time, do you envisage there'll be a gradual shift in the makeup of the catastrophe bond market in favour of this region, given the fact that Asia Pacific is very much on the front lines of climate change, and we are experiencing an increased frequency of extreme weather events across the region?
There is no shortage of natural catastrophe risk in the region. There is no shortage of property exposed to natural catastrophe risk. And so as the market continues to develop, we'll see increasing demand for reinsurance and therefore for insurance-linked securities.
There's clearly some commendable progress that's been made in the last few years in establishing a catastrophe bond market here locally. And it sounds like sidecars are very much the next step in terms of enhancing the sophistication of Hong Kong's ILS regime.
Yeah, it's a great point. I think it's an obvious next step for us in the region. Cat bonds serve a great purpose, but they generally work best at scale, and that restricts access to this source of capital to quite a lot of smaller market participants. I think a sidecar is a great vehicle for reinsurers in the region to access third-party capital and to offer a diversified pool of risk in an ILS product to investors. And I do think that really opens up the third-party capital regime to smaller players in the industry.
Do ILS investors see Asian risks as welcome diversification in a market which is, as you say, very North America centric?
Yeah, that's an interesting question. I think it very much depends upon the nature of the asset manager in question. For a lot of these investors, if they're part of a broader pension fund, they essentially are the diversification, and so they're not necessarily looking for diversification in that allocation. But some of the dedicated ILS players are very welcoming of diversifying risk.
Thank you for joining us this afternoon, Iain. It's been really interesting listening to your answers, and I'm sure there'll be lots of exciting developments for us to talk about in the coming years when it comes to the ILS market here in Hong Kong.
Well, thanks, Aid. Appreciate your time, and yeah, you're very welcome.